This is the COMEX silver inventory, and this is just going back for a year. So you can see that massive decline. So regardless of the spot price, which is just about keeping you away from the actual physical metal itself, how many times can you be lied to and you do not know the truth? What we're seeing is physical demand continues to escalate. And of course, we do know that there are a lot of entities that use just a finite silver, 36 of them. But almost in this last year, you've had what? Over 312 million ounces. Actually, that's the last 24 hours, just disappear. And again, for silver's use, there is a finite amount, but in the meantime, there are 36 different physical users. So don't believe the fiat money lie on the contracts, because they can create as much silver that does not nor ever will exist, but those users don't go away. And so the volatility that you see in the markets, it's really silver telling you that something major is going on. But keep in mind, when that silver leaves the COMEX, it doesn't come back. And before we go on to silver or on to gold, do you want to make a comment and say something about this?
Yeah, I mean, that is a very big, change in the trend when we see that large dip down in the physical holdings that the COMEX has. And it kind of goes back to what we talked about last week as well, when people can stand for delivery of those contracts of the COMEX.
Exactly.
So we're seeing this now play out more in real time, where maybe there's people that want to take the physical delivery over rolling it over into another futures trade or keeping it as fiat. So would you say, Lynette, that that's maybe a sign too of that public confidence piece being lost in the fiat?
Yes, I would absolutely call this a sign. And that's really why silver is the fuse.
Yeah.
It's more volatile. It reacts first. Though when I was looking in the gold contracts, that was also like really interesting. I'm going to go through this quickly. Just a reminder, because when I did the event, the Plutus event last week, somebody came up to me and said, you know what image made the biggest impact on them was this chart and the one on the gold, where you're actually listing out the users, because people don't really think about that. But when you see the big spike and that's not the users, right? That's the traders. And soon, I can't tell you when, because who knows, but at some point in the reasonably near future, well, what's going to happen is it will be the physical true supply and demand that dictates the prices. But let's do the same thing with gold, right? Look at that. That's the COMEX gold inventory. It looks even different than the silver, doesn't it?
Yeah, absolutely.
It drops off that cliff, and you can see something even bigger than that. There are, let's see. Yeah, this is where over 25 million ounces disappeared in 24 hours. You saw that big drop off again with the users, but I am going to show you what is happening in the long term on the gold chart, which I did not see the same pattern in the silver.
Yeah.
Look at this.
Wow.
That goes back to 1993, right at the very beginning. And you can see the major pattern shift that happened in 2020. And actually, even 2008, it didn't change that much. But look what happened in 2020 with that massive upswing. And then again in 2025, when we really started talking about the shift that's happening between the digital and the physical markets.
Yeah.
You want to make a comment? I mean, because have you seen this? Or is this the first time you've seen this chart?
Yeah, this is the first time I've seen that. And I mean, it really does show. So you've got this huge dramatic change in 2020. And then that was just barely 5 years ago. When you see now it went down, but it made a higher high. Right. And so that I think is very telling of when, like you said, it's a pattern shift, and
Massive.
it's something that to me looks like it's getting more volatile, right? If you're getting the ups and downs.
Well, yeah, but what are we looking at here? We're looking at the COMEX gold inventory.
Inventory, yeah.
That's what we're really looking at. So in the beginning of 2020, do you remember they even had to, well, they changed SLV to just reflect the spot price,
right?
Because they couldn't get their hands, and they still can't. It hasn't gotten better. They couldn't get their hands on enough physical silver to put those baskets together. But what this is really showing is I think, is the final breakdown, because I was convinced in 2008, I remain convinced today that 2008 is when the system actually died.
Yeah.
But from 2020, and you remember what was happening in the futures markets and all of the markets, there was this flight to safety. They had to build their inventory.
Yeah.
Right?
Yep.
Why? Because gold is the anchor.
Yeah.
Because gold is what protects you from it. But look at the massive dips. I'm telling you right now, what we're looking at here is significant. It's very significant. Entities are standing for delivery. And just like silver, there is a finite amount of it. Now, I didn't have a chance to put these slides together, so kind of bear with me in there. But you see this dark line. Oh, you were not going to see it there. Wait, I have a laser here, right? If I point it here, does it work? No. Okay, the laser doesn't mean anything. But the first quarter of 2026, there was higher demand. Right? That's a 5-year average. That line that you see in there is the 5-year average. So demand is increasing, even as the spot price, after it peaked, it dropped. And people are, oh, well, maybe gold isn't, because that's not gold. That's a contract.
Yeah.
You've got the physical gold right by you, right? Did it evaporate? Did all of those users magically disappear?
No, and it didn't change either.
Exactly.
Nothing changed about the actual physical asset.
Yep. So you want to get your strategy laid in, because that's what central banks and smart money is actually doing. And here, central bank buying remained elevated in Q1 alongside of a pickup in reported sales. So understand that that is savings. Gold is your savings. And so when a country gets into trouble, they have savings to fall back on.
Yeah.
I have a huge bugaboo, because one of the things that I've seen over time, and I really want your input on this, because you're a different generation than I am. But in my generation, we were really taught to accumulate things, right? And then when you run into a problem, you have savings, you have something to fall back on.
Yeah.
But more into your generation, weren't they encouraging you to just accumulate experiences?
Yeah.
Right?
Yeah.
And I'm not saying don't have those experiences, but if you spend all of your wealth on experiences and you have no hard assets to fall back on, you have no savings to fall back on, what do you do?
Yeah. And I think that also goes into something that you've brought up before. These, buy now, pay later companies, or pay in installments.
Yeah.
It's a way to get, younger generations, those consumers, to not think about what they're doing so much. Like you said, don't worry about it. You don't need a hard asset. If you can't afford to pay for all of it right now, we can just break it up into, 12 easy payments for you, or 4 easy payments.
Yep.
And so, yeah, that's very true. It's one giant revolving door of debt. And the question then becomes, especially when you see that chart where the COMEX the inventory, right? It's going up and then it goes back down.
Right.
I think that we're seeing something big there. Yeah.
We are seeing something huge there.
Yeah.
And it's the inventory that they're pulling in, because they know the COMEX is about contracts. It's not about physical delivery.
Right.
But there are enough of their entities that are going, look, we're going to tell you right now, we want physical delivery.
Yeah.
So here's, you can take that off now. Tom. Thank you. Because here's the other part of that. We don't have that physical delivery here. Where is all that gold coming from? Kind of like we talked about in 2025. And once that is delivered out from Europe or Switzerland or wherever it's not coming from China, that's for sure.
Right. Yeah,
Right?
they're not letting it go.
No, they're not letting it go.
Yeah.
But once that inventory comes into the COMEX and then gets delivered out, well, did they buy that outright? Did the Bank of England send that in from I don't know, the government's gold that they're holding? Right?
Yeah.
I'm telling you, the fireworks will be huge.
Yeah. I mean, do you think that there's like a layer of illusion that the COMEX always has to try and keep up?
Well, yeah. They don't want you to know what's going on.
Right.
The guys that they want, it's kind of like the FDIC. The big kahunas, they're the ones that are driving all of this. They know what's going on. That's all that really matters.
Yeah.
The little guys breaking those contracts down into 1 ounce pieces so that the normal guy can afford to support the market, right? What do? They privatize the gains and they democratize the losses.
Yeah, that's that shift of the risk, right? That risking shifted away from them onto everyday people like you and me and everyone watching.
The people that believe and continue to believe the lie.
Yeah.
So I'm telling you, don't believe the lie. And you can be lied to every single time unless you know the truth. And we just showed you what's happening in the COMEX with the physical inventory.
Yeah.
It is telling you to get your strategy in place. Get it done while we still have that option. Because we don't have all the time in the world. We only have as much as we have. Now, I do know that there was something that you wanted to bring up as well. Was there?
Yeah. It just was interesting. About maybe an hour before we were supposed to go live, there was some breaking news, I guess, on the Kevin Warsh he cleared his Senate hurdle for being instilled as a governor at the Federal Reserve, and then as early as tomorrow, he could actually get that chairman vote. And just to see if that regime change, because that's what he's saying he wants to see. If it
well
at the Fed,
yeah. It's really interesting because the CPI, the inflation numbers came in hot.
Yeah, a little hot.
We talked about it, right? Of course they're going to come in hot. We're at the end of this currency's life cycle. Why can't they control it by raising rates? But the markets don't like higher interest rates.
Yeah.
So it has nothing to do with valuations, but it makes it harder for anybody to justify lowering rates.
Right.
Because lowering rates is about inspiring borrowing and spending, which inspires more inflation. And that's why they have a hard time lowering rates when core PCE, which it's garbage anyway.
It's their magic number, and it still came in hot with their magic number. So what's the real number?
Exactly.
Is what I think. Yeah.
Exactly.
Yeah.
And in the meantime, I think they did some calculations on the average wage earner and how much they actually have lost out. So things are costing more. And because of those things that are costing more, the people that can least afford it, that need that 4 easy payments, right? Those poor people are hurt even more.
Yeah, right. Yeah, it's almost like it's by design, right?
Well, it is by design, but you know what they don't want to have happen, but I don't think that they can avoid it? That is that loss of confidence. This is a con game.
Yeah.
So we already hit recently the lowest level ever in consumer sentiment.
Yeah.
So at least since they've been tracking since 1952. So what do you think this is going to do to impact. They're not looking at the numbers. They're people are just trying to make ends meet. They're just trying to figure it out. But if things are getting more expensive and your paycheck goes less and less and less far when you're already
Yeah.
having trouble meeting those ends meet, what does that do?
Yeah, you've said, many times, and you've done a lot of different videos on it, is there's three legs to the stool that are keeping the fiat system afloat, and the first two already long ago abandoned the hope. So that consumer confidence is really the only thing left keeping this giant illusion going. And
Right.
like you said, nobody can guarantee anything, but you can guarantee that everything will get to its fundamental value.
Yeah,
Yeah.
absolutely. So you need to keep that in mind, because I've been telling you guys for God knows how many years that when the public confidence rather goes to an all-time low, for me, that means that the clock now is really ticking. Kenneth, I'm so honest to goodness, I'm so glad that this young man is here. He's doing a great job,
Thank you.
and I appreciate it a
Yeah,
lot.
it's my pleasure. Yeah, it's great. I mean, I think it's just important that, like you said, the information that you have, the knowledge that you have, get it to as many people as possible, because honestly, you can't put a price on knowledge.
Nope. And
So,
this is one way that we are future proofing our company, because we intend to be here for you for the rest of your lives. No doubt about it.
Yeah.
And until next we meet, I know that together, just like I think this is better with us than, I think we're stronger
Yeah.
together in community than we are as individuals. So let's come together and make a positive difference for a lot of people. And until next we meet, please, wherever you are in the world, be safe out there. Bye-bye.